This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. It is Thursday, August 6th, 2026. Yesterday, we warned you that the physical world was putting a hard cap on digital expansion. Last night, the tech world was finally forced to confess. The infinite growth AI narrative just collided head-on with a depleted global mining sector, while a logistical nightmare in the U.S. heartland is fundamentally breaking agricultural pricing. The Silicon Valley confession. Last night, a massive tech hardware giant slashed its production guidance. They explicitly cited insufficient physical procurement of advanced silver paste and high-density copper components. Spot silver gapped up to $62.30, while tech equities are bleeding pre-market. Meanwhile, copper tests historic $15,000. LME Copper has surged past $15,000 per ton, or $6.80 per pound, as infrastructure developers desperately try to front-run remaining supply.
The U.S. agricultural market is fracturing. The drought-stricken Mississippi River bottleneck has completely paralyzed barge traffic. Midwest grain elevators are piling corn and soybeans on the ground.
Because they cannot ship south, local cash prices are collapsing, while Gulf Coast exporters are bidding premiums to record highs. Brent crude is holding firmly at $88.10.
Let us take a deep dive into why last night's call marks the end of the infinite AI illusion. You cannot build a trillion-dollar digital empire without pulling atoms out of the dirt.
Wall Street modeled exponential growth for AI data centers, but the physics didn't add up. The constraint is no longer software, it is raw, unrefined metal. Capital is rotating into physical miners. Do not let paper exchanges shake you out. Industrial buyers are paying massive OTC premiums over the ticker price. If you own the silver and copper in the ground, you hold the key. This brings us to the Mississippi basis crisis. The physical highway connecting the U.S. farmer to the global market is closed. Exporters are preparing to declare force majeure on international deliveries. The river crisis isn't just about soybeans, it's about energy. The inability to move refined diesel up the river is creating localized energy shocks and spiking costs for U.S. agriculture. Here is the TradeFlow take. The physical ceiling has been hit. Last night's tech guidance cut proves that the commodity supercycle is the absolute dictator of global growth. Short hardware manufacturers who failed their supply pipelines. Go max long on primary metal producers, pivot to international fertilizer and seed producers who will benefit from the calorie panic. Head over to TradeFlow TV so your portfolio stays synchronized with macro reality. Stay liquid. Stay sharp. Have a highly defensive Thursday session, and we will see you tomorrow.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.